Hello everyone. This is the pre-market report video for today, May 25th in the Indian stock market in terms of Nifty and Bank Nifty. Yesterday, before the Indian market opening, all the major Asian market, both Japan and China's major index, traded over 1% negative and closed significantly negative. So, in line with global cues, our Nifty opened gap down of 50 points, less than 18,300. But surprisingly, immediately within 15 minutes, it crossed 18,300 and moved above 18,350. Then at 11:30, UK's National Statistics released the consumer inflation for April month, which started to affect our Indian market as well. On year-on-year basis, it comes as 8.7% against expectation of just 8.3%, and on month-on-month basis, it comes as whooping 1.2% against expectation of 0.8%. Here, 8.7% year-on-year itself a bad data, 1.2% month-on-month basis is the super bad data. Because of this renewed inflation worry, at 12:30 p.m. Indian Standard Time, all European market opened over 1% down and closed near 2% down. I mean 2% in Nifty term, it's over 350 points down in one single day. Here, please have a look at this graph. I plotted Nifty's price change blue color with the three European major index. As you see here, UK inflation data started to erode the Nifty's gain and the bearish European market pushed the Nifty down into the negative territory. So now, on top of other worries, now this UK's inflation worry is also added. See how bad the European market was yesterday, all closed down of near 2%. Despite that, Nifty closed only 0.3% down. So, the yesterday's impact is nothing to do with Indian market, it's just very bad global cues. Anyway, sector-wise, metal index dropped 1%, bank down by 0.5%, while pharma added 1% and the power sector up by 0.6%. The overall market is not that bad as the advanced weekend ratio was 0.9:1. In terms of institution activity, yesterday too, both FII and DII were net buyers. FII net bought for 1,185 crore rupees and DII net bought for 300 crore rupees. Moving on, after the European market, the negativity continued on US. I mean, the debt ceiling negotiation now keeps on dragging and there is no clear sign of progress despite several rounds of meetings. To be honest, this now starting to dent the investor sentiment as we are getting closer to the deadline. Here, the worrying thing that made the investors more worry was the statement from the Republican House Majority Leader, Steve Scalise. Here, please note, he is also one of the members who attended this debt ceiling issue negotiation with US President Biden. He told the reporters that he likes to see more transparency on how they came to that date June 1st. He said he thinks that US Democrats were hedging. And another Republican House representative mentioned that US government got money, this debt ceiling issue is completely false and Democrats are manufacturing the crisis. Basically, now Republicans think there is no debt ceiling issue at all. Because of this mindset, it's creating the panic among investors. Around 2 p.m. Eastern Time, last FOMC meeting minutes was released. In that, most of Federal Reserve officials generally agreed that future rate hikes were less certain and preferred to keep policy flexible as inflation continues to run above trend. And collectively, they agreed the impact from the banking crisis was very uncertain. Simply, which means they are open to pause the rate hike. This is very positive, but despite that, it gone unnoticed last night because of this debt ceiling issue. At the end of the day, Dow Jones dropped 0.77%, S&P 500 down by 0.73% and Nasdaq lost 0.61%. In case of VIX, it increased over 8% and moved above 20. Only on last Monday, it was near 16. About oil, already the price was up due to Saudi minister's warning. In addition, as per the inventories data by EIA, there is a huge drop in US oil stockpiles. This made the oil to increase further 1% up. At the time of this video, WTI crude oil is trading near $73.5 per barrel and Brent crude oil is trading near $78 per barrel. Coming to Indian ADR, despite all the negativity all around the world, it was traded in line with Indian market. In fact, both IT stocks closed marginally positive. Still, both banks closed negative around 0.5%, but as I said, that's in line with Indian market. Regarding yesterday's Nifty, since today is the monthly expiry, I don't think any premium is applicable. At 3 a.m. Indian Standard Time, it closed near 18,250, which means 40 to 50 points gap down opening. This is what happened yesterday in all around the world. Now let's move to the next topic. First, yesterday RBI governor did the press conference. In that he mentioned that India no longer got inflation problem, but he believes that this El Nino heat wave might cause the huge worry. Even at present, the power demand in India in the last 3-4 days increased to all-time high. That's also one of the reasons why power stocks were positive yesterday. Anyway, in addition, he said that India GDP growth on FY 2023 could be above 7% and he expects the GDP to grow at 6.5% in the present financial year. This is very positive since all the brokerage, World Bank and IMF are projecting India to grow less than 6%. Let's see. And the second info I like to share is about the report that released by the marketing firm called Gartner. They said worldwide government might spend near 590 billion US dollars in the IT space in this financial year. Since almost all the government wants to update their IT infrastructure, thus Indian IT companies will be the major beneficiaries. This is clearly positive for IT stocks, but only time has to tell that which company benefited from which country's government, etc. Moving on, LIC and Oil India released their quarterly earnings. LIC profit increased over 450% and reached around 13,400 crore rupees. This is very positive, but standalone net premium income fell by 8.3% year on year to 1.31 lakh crore rupees for the March quarter. But on a sequential basis, quarter on quarter, the premium income increased by 17.9%. So overall, I consider the results were good. In case of Oil India, it did beat the analyst estimation. In another news, Infosys announced that they formed the collaboration with Adobe to transform their digital workforce through Infosys online learning platform, Infosys Springboard. Both organizations will aim to create over 10,000 new Adobe certified experts globally by 2025. It looks Infosys going to create Udemy kind of business. As a summary, IT stocks looks good, but global momentum, US market and Indian banks ADR was not good. Yesterday's Nifty is indicating gap down opening of 40 to 50 points. About the things to look out, ZTV, Bharat Dynamics, Emami, Vodafone, IEX, Steel Authority of India and TTK Prestige are some of the major Indian companies' earnings results are scheduled to release today. In terms of macro, during our market hours at 11:30 am, Germany's GDP is due to release. Then in the aftermarket hours, US GDP data is due. After that, US weekly jobless claims data and number of pending home sales data is scheduled to release. Coming to technical, day before yesterday on daily chart, Nifty forms the shooting star candle. Thus, in the yesterday's pre-market video, we discussed the psychological behind the formation that it's kind of indicating a potential price stop and reversal. But in order to confirm, we need the next candle's high to stay below the high of Tuesday candle and it has to close below the Tuesday close. If it happens, then we might confirm the price reversal. This is what we discussed in the yesterday's pre-market video. And yesterday, exactly the same happened on the Nifty chart. I mean, the new candle's high is less than previous candle and the close was also less than that of the previous candle close. In addition, it forms another back-to-back shooting star candle, which means again the buyers who bought during the day are now in a losing position as the price dropped back to the open. This now, as per theoretical technical analysis, it confirms the price reversal. Today, Nifty has to recover, move and sustain above 18,300 in the first 2 hours. If not, we might expect further fall towards 18,200. Even Bank Nifty 2 forms the similar type of candle, but here it has been in the same range 43,500 to 44,150 for almost 11 to 12 trading sessions. So I'm struggling to define this as an uptrend or a downtrend. If we consider this as a downtrend, since in same place for more than 10 sessions, this candlestick is called as inverted hammer. Unlike the shooting star, inverted hammer is the bullish reversal. Let's see. But however, in Bank Nifty, the trend can be confirmed only if it break the range and close above or below 43,500 to 44,150. Similarly, for Nifty, it has to break the range either below or above 18,050 to 18,400 to confirm the trend. Moving on, from options engine open interest, significant put options unwound at different places like 17,900 to 18,000 and 18,350 to 18,400. and huge quantity of call options were added at above 18,300. Here it's difficult to conclude anything. So based on overall options open interest data, 18,200 got the nearby maximum put options, thus it's the immediate support. Similarly, 18,400 got the maximum nearby call options, thus 18,400 is the resistance to break. Just for info, significant quantity of short straddle is present at 18,300. Then in case of Bank Nifty change in open interest, significant quantity of put options unwound at above 43,800 and huge call options added at above 43,700. Like Nifty, here too it's difficult to conclude anything. So based on overall options open interest data, 44,000 got the nearby maximum call options, thus it's the immediate resistance. Similarly, 43,000 is the next maximum nearby put options without significant call options. Thus, 43,000 is the support to look out. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me build the algorithm and will also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I am doing it for my and viewers' educational purpose only. Thanks for watching.